Close your eyes for a second and picture this. A coin that started as a joke on a dog meme becomes a headline on every business channel, an ETF is launched for it, big stores start testing it at the checkout, and suddenly your uncle who never talked about crypto is asking whether Dogecoin is the next big thing. That's the moment we're in, and the question burning on everyone's mind is simple. In 2025, is Dogecoin still just a meme coin, or has it begun the slow, messy climb toward becoming a legitimate market leader? Stick with me for the next 10 minutes and I'll walk you through the latest developments, the real numbers, the people pushing it forward, and the stubborn limits that could keep Doge forever in meme territory. By the end you'll know not just what happened, but what matters for anyone holding, trading, or watching Doge right now. First, let's acknowledge the headline event that changed the conversation. A US-listed Dogecoin ETF launched this year, a watershed moment that turned a laughingstock into a product regulated and listed for mainstream investors. That ETF, the Rex Osprey Dogecoin Fund, ticker Doge, among others in the pipeline, put Dogecoin on the same institutional map that Bitcoin and Ethereum started to occupy with their spot ETFs. And that is a very big deal for recognition and distribution. This isn't just about one tweet or one viral video, it's about Wall Street plumbing, custody solutions, and brokerages being able to offer exposure to Doge in a way millions of retail accounts can access through a familiar interface. That shift from fringe token to investable product is why the conversation about Dogecoin in 2025 sounds so different than it did a few years ago. But a listing alone doesn't complete the story, far from it. When you dig into the mechanics, you see a split between perception and reality. The ETF gives easier access, yes, but it does not change Dogecoin's tokenomics overnight. Dogecoin remains inflationary by design. Roughly 5 billion new Doge are issued each year, and the total supply keeps growing. That steady issuance matters because it changes how scarcity narratives play out. You can't point to a capped supply like Bitcoin's and make the same scarcity argument for Doge. People often forget the detail when headlines talk about institutional adoption. An ETF is a distribution mechanism, not a change to the underlying money supply. The practical effect is simple. Sustained institutional demand matters more for price if supply can expand. Otherwise, new issuance can temper big rallies if demand doesn't outpace the fresh coins entering circulation. The next piece of the puzzle is adoption, real-world places where you can actually spend Doge. It used to be that Dogecoin's value came almost entirely from social media momentum and celebrity attention. In 2025, you're seeing more merchants and payment processors test or accept Dogecoin, from niche online shops to select brick-and-mortar pilots. Wider acceptance at checkout matters. It gives Doge a use case beyond speculation, even if current merchant adoption is still small relative to major currencies. The difference between a meme and a market leader is not one viral tweet, it's repeated, frictionless usage by millions of consumers and merchants. Right now, adoption is moving in the right direction. There are real pilot programs and listings that make it easier to use Doge, but it's not yet at the scale that would make the token a default medium of exchange. Adoption is the slow burn, not the flash. Developer activity and protocol upgrades are the engine behind any crypto that wants to be taken seriously long-term. Dogecoin is open source and community-driven, and while it was originally a fork of Litecoin and Bitcoin code, recent years have shown renewed attention from developers, incremental commits on GitHub, and community efforts focused on improving stability and upgradability. Developer momentum doesn't always translate into instant price moves, but it does matter for credibility. Exchanges, custodians, and institutions prefer assets with active maintenance because that reduces operational risk. If Dogecoin's developer base keeps delivering predictable improvements, better wallets, clearer documentation for custodians, and performance tweaks that will lower institutional friction and make the case for Doge as more than a meme. Conversely, if activity remains thin, institutions will treat Doge as a speculative token in their risk buckets rather than core allocable assets. We also have to talk about narrative engines and personalities. No conversation about Dogecoin is complete without mention of the cultural forces, influencers, community moderators, and yes, high-profile celebrities that fuel attention. In particular, Elon Musk's intermittent endorsements, jokes, and indirect signals have repeatedly moved markets. That kind of influence brings eyes, users, and sometimes capital. But relying on charisma is a double-edged sword. Culture can lift a coin higher than fundamentals would justify for a while, but it also ties price to moods, tweets, and trend cycles. For Dogecoin to transition from meme to market leader, it needs to outgrow the idea that its price is primarily determined by celebrity attention and instead be supported by measurable fundamentals, real adoption, institutional flows, and robust infrastructure. Speaking of flows, the arrival of ETFs invites a structural shift in how capital meets Dogecoin. ETFs can convert passive, index-style capital flows and big brokerage money into Doge exposure without the buyer touching an exchange wallet. That makes investing more accessible and could smooth volatility as capital becomes more diversified. But there's a catch: ETFs don't necessarily create instant spot demand at scale. Early inflows can be modest while institutions test custody and operational details. Meanwhile, speculative traders respond quickly to headlines and reprice positions. In the short run, that mix of patient institutional capital and frenetic retail trading can create whipsaw price action, sharp spikes followed by fast retracements, which is exactly the kind of volatility that keeps Dogecoin in the headlines but doesn't automatically cement it as a reliable, long-term store of value. Risk management and market microstructure also matter. Dogecoin often shows thinner liquidity at certain price bands relative to its headline market capitalization, which makes it vulnerable to outsized moves when big orders hit the market or when derivatives desks rebalance hedges. Institutional participation can deepen that liquidity over time, but until order books at large exchanges consistently tighten and market making becomes more persistent, Doge will retain a reflexive volatility profile. That's important because institutional treasuries and corporate treasurers don't allocate to assets that can swing wildly overnight. They allocate to things they can model and hedge. So the path from meme to market leader includes the steady buildup of reliable liquidity and professional market-making activity. Let's be pragmatic for a minute. What would Dogecoin need to do to truly shift from meme coin to market leader? First, sustained real-world adoption. Not just a few pilot programs or payment gateways, but broad merchant acceptance and consumer usage that creates continuous transaction volume beyond speculation. Second, clearer and deeper institutional involvement, not a one-off ETF listing, but recurring inflows, custody solutions, and endorsements from diversified institutional allocators who see Doge as a component in diversified crypto exposure. Third, an active, predictable roadmap from developers that addresses scaling, usability, and interoperability. Fourth, a macro environment where risk on capital is plentiful and regulatory clarity allows institutions to allocate to digital assets without exotic legal risk. Hit those marks and Dogecoin's narrative changes. Miss them and Doge is likely to stay in cycles of hype and correction. There's also the human psychology piece that can't be ignored. Meme coins succeed because of narratives that are emotionally persuasive: the underdog story, the joy of being part of an internet movement, the communal thrill of a fast run. Those social drivers can sustain an asset for a surprisingly long time, and they also create a loyal base that can resist declines. But emotion-driven markets attract short-term capital chasing momentum and not long-term allocators looking for cash flow or productive usage. For Dogecoin to evolve, it needs both: a community that keeps the culture alive and an ecosystem that converts culture into utility. So where does that leave an investor, a trader, or a curious observer in 2025? If you're long-term oriented and believe in the idea that a currency can be social, that is, its value can come from mass peer-to-peer acceptance and repeated use, Dogecoin is an interesting speculative play on that thesis. It has brand recognition that no other meme coin truly matches, and with ETFs and adoption pilots, the rails are being laid for wider participation. If those participants show up and use Doge, the coin could become a durable, if unconventional, player in payments and microtransactions. But if you're expecting a straight, scarcity-driven march to the moon, remember that Dogecoin's inflationary supply and history of narrative-driven pumps complicate that expectation. For traders, the current landscape is fertile with opportunity and risk. Volatility remains high, meaning there are intraday and swing setups for those who understand liquidity and manage leverage carefully. But headline-driven moves around ETF announcements, regulatory news, and celebrity mentions can easily wipe out leveraged positions. That's why position sizing, stop discipline, and an appreciation for market microstructure aren't optional, they're survival skills. For institutions and service providers, the calculus is different. Custody, compliance, and operational certainty are the gating factors. Many institutions will wait until there's demonstrable on-chain usage or until product structures allow them to hedge exposure without significant basis risk. ETF listings help, but the real institutional commitment will be visible in steady AUM growth, recurring trading flows, and the use of Doge in diversified strategies. Keep an eye on those metrics over months and quarters, not headlines by the hour. Finally, let's not forget regulation. Dogecoin's journey from meme to market leader will be shaped by the clarity of rules and the willingness of regulators to treat memecoins as financial products. The emergence of ETFs suggests a pragmatic regulatory stance in some jurisdictions, but global regulatory fragmentation is still a reality. Compliance and legal risk will influence how institutions treat Doge and whether payment networks are comfortable integrating it at scale. So what's the bottom line? Dogecoin in 2025 sits at a crossroads. It has new institutional tools, growing merchant experiments, and an active cultural base, all the elements that can, over time, support a transition beyond mere meme status. But structural limits remain: inflationary supply dynamics, variable liquidity, reliance on narrative engines, and the need for deeper developer-led upgrades. The future isn't binary. Dogecoin can live in both worlds for a long time, a powerful cultural token with pockets of genuine utility that occasionally commands serious capital flows. Whether it becomes a market leader depends on sustained adoption, credible institutional commitment, and technical maturation, and those are things measured in quarters and years, not viral clips. If you're watching this as someone who owns Doge, reevaluate your thesis in light of the facts. Are you here for the culture, the long-term adoption story, or the possibility of trading volatility? If you're not invested, watch for the signals that matter: ETF inflows over months, steady merchant usage, developer milestones, and improved liquidity before deciding whether Doge deserves a place in your portfolio. For everyone else, enjoy the spectacle but don't confuse the noise with the roadmap. Thanks for sticking through this. If you found this helpful, let me know in the comments. Do you think Dogecoin will graduate from meme coin to market leader? Or will it always be the internet's favorite joke with occasional fireworks? Hit subscribe if you want more grounded takes on the biggest crypto stories, and I'll see you in the next breakdown.